Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The ever-present mid-April, late May bearish Andrews pitchfork is present no more. Nothing challenged for its dominance except when the market dipped down into the congestion zone below. As I said last week, and I quote, "Nothing is challenging it for dominance at this time. However, something may be on the horizon. This is in the form of lows from 2019 and 2021, specifically the August 2019 high at 18,850, the June 2021 high at 18,610, and a nondescript high from May 2021 at 18,265. That last one halted the decline last Friday and started the current move back up." End of quote. Those lows and congestion as a zone were enough to turn the market up 2 Fridays ago into a possible V bottom as well, and prices have risen since, most recently yesterday with what looks like an indecisive spinning top. But because of the long tongue and tail on the action, it made it also into an outside day pattern. Not only did the market punch up free of the bearish Andrews pitchfork last Thursday with a hanging man pattern, but up to and including today, prices have seemingly cleared the next obstacles. The May 2014 high at 21,608 and also the February 2014 high up at 22,155. Now we have some recently constructed resistance in the 23,000 area, but now the next real resistance will be the flatlining long moving average, currently at 24,530, that's above, and maybe sometime soon by the declining short medium moving average, currently 24,850, as it will shortly punch down through the long moving average. Whichever way you cut it, we seemingly have little on the top at the moment until the moving average is above. Thus, I will retire the bearish Andrews pitchfork after this commentary. LME 3-month zinc. Unfortunately, this is a long commentary on this one. Last week has, and depending on how you look at it, has been either a period of sideways consolidation or a period of intraday indecision that this week may have finalized. My personal feelings are that it's a mixture of both, with about 80% intraday indecision, about 20% consolidation. However, first off, the context. I'd previously spoken often about how I had on occasion taken a step back and looked at the monthly charts here to get a better picture. From these I noticed a significant pattern here, still in operation, plus a second pattern that was formed and is also now in operation. The principal pattern was the 2015 to 2020 bullish Andrews pitchfork. The most recent events involving this pitchfork were at the end of May and start of June, when the market approached the middle time from below, currently 40.09, and was rejected. And then most recently the market moving down to within sight of the lower time below, currently 26.80, just emerging from the bottom of my daily chart. Okay, so if we go back now and look a little more closely at certain elements in this market. In mid-May and then especially in mid to late June, we can see for the former how the market came down and kissed the lower trend line, currently 36.04, with a very large ascending expanding wedge pattern. Mid to late June, the market kissed the trend line again and broke it. We are still seeing the implications of that move today. Hence, the primary target was achieved, but the secondary, much harder to reach, target X1, is still live and out there, though it's way lower below the bottom of my daily chart right now in the 2082 area. Looking at the prospects for target X1 being achieved, I would say it would be fair to treat this at the very least as a longer term target prospect. There are a few more patterns that I'd like to discuss. The first is the prospective March to April bearish shift pitchfork. I say prospective as this pitchfork still has not touched either the upper or lower times yet, and until it does, it will remain with me prospective. One time that has seen action, especially since May, has been the middle time, currently at 31.47. In addition, we have a more recent bearish shift pitchfork for the mid-April to late May action. The market chose last week to go sideways and thus over the middle time, hence my 80-20 perception of indecision versus consolidation. Now, my thoughts last week were that, and I quote, the market does not like being above the middle time, currently 28.60, of the prospective March to April bearish shift pitch hook, end of quote. I still stand by that, as I can think of no better way to express how the market did not like doing something it was forced to do by circumstances than the third level countering intraday indecisive actions we saw last week. This week, now that prices are clear over the middle time and the time itself is slowly sinking into a base of congestion below, stretching from 29.59 down to 29.05, and then again at the June low at 28.10, well, this market can look a little more clearly to the upside. And there are two dynamic descending levels to look at, plus a static level. The two dynamic levels are part of the previously mentioned bearish shift pitchforks, namely the middle time, currently at 31.46 of the bearish March to April shift pitchfork, and the upper time, currently 32.44 of the bearish April to May shift pitchfork. Of the two, the upper time I suspect is the more significant. The middle time drops by about $13 a day, and the upper time drops by about $20 a day. So by late next week, both will be within where the market is now. So it is worth watching those. Meanwhile, the static resistance is a congestion between 32.01 to 32.20, from the June 2018 high at 32.20 being the leader. However, these do not offer the level of support on the way down 4 weeks ago. No, this did not offer the level of support on the way down 4 weeks ago. So it placed a big question mark on it as to whether it will offer resistance on the way up. It'll be interesting to see if these descending times pressure the market back down into the congestion zone below. It'll be interesting to see that. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.